Awesome.
All right.
Still thinking.
All right. We are live. Hello, everybody, and welcome
Hello.
to another session of the National Entrepreneurship Week. I am Dr. J, your host for this webinar, which I am truly excited about home ownership for entrepreneurs. As you've heard over the last couple of years of this whole everybody buying homes, rushing to it, toppling everybody over, 20 people visiting the house in 1 hour. It was crazy madness, but it's we're going to be speaking about that with that subject. And just a quick about this 2023 National Entrepreneurship Week. This is part of the National Entrepreneurship Week webinar series that we're hosting this week. And the National Entrepreneurship Week is a congressionally chartered week dedicated to empowering entrepreneurship across the U.S. It's a national initiative which was relaunched in 2017 as National Entrepreneurship Week to bring together a network of partners from Maui to Miami to educate, engage, and build equitable access to America's entrepreneurship ecosystem. And what better way than talk about entrepreneurship when talk about home ownership, right? And it's, of course, it's obtainable to entrepreneurs, whatever people say. So we have a special guest, Julisa Sanchez, who is going to talk to us about home ownership for entrepreneurs. So, Julisa, I'll let you introduce yourself.
Thank you, Jay. Thank you for having me today, and hello to everyone. My name is Julisa Sanchez, and I am the market president of the Chicago branch at Waterman Bank. I am thrilled and excited to be here today. I definitely have a big heart for entrepreneurs and self-employed individuals. Jay, I think you've learned that I definitely enjoy helping our entrepreneurs and our self-employed. Making sure that they're able to buy and they prepare themselves to have all their financials in order to achieve the American dream of homeownership or even investment properties. And I enjoy doing that. It's what I sleep, eat, breathe, and do every single day. So thank you for having me today.
No, most definitely. Thank you, Julissa. And so I know home ownership is a very big part, as we heard. Home ownership is what builds wealth for individuals, right? That's one of the key factors in this country, the United States, that builds wealth. Let's talk about what in your world, right? So on Monday, one of the first sessions I had, we talked about ed tech and entrepreneurship, and we were talking about what is entrepreneurship. Everyone has their own definition. You can Google it, you can find it, but in your world, in your industry, how do you define entrepreneurship?
Well, entrepreneurship and self-employed are pretty much the same in terms of income purposes, right? They file taxes, but they basically are both business owners who are paid their contracts through 1099 and or potentially cash payments, right? So essentially, there isn't a defined difference in terms of taxes and income because it's basically the same. They're basically both filing not as W-2 employees on a 1040, they're filing as self-employed. Now, Jay, there are different types of filings. When you're a business owner, you're going to potentially be filing as either S corp or individual, and there's several options on how they're going to be filing their income taxes. When it comes to entrepreneurship, really the definition and what defines each is that an entrepreneur is someone that sets out and starts a business, almost like a startup, with a industry that there may be a need for, right? That it doesn't exist yet. They create a product and they take the risk on financially and they take off and they create this business that is not there. It basically fills a void or a need that doesn't exist. When it comes to a self-employed business owner, that individual is basically already not recreating or reinventing anything. It already exists. So for example, somebody that opens up a bakery or a restaurant, those are already industries that exist, that what they're basically are doing is they're the owner, they're starting a business that already exists. However, they're both filing taxes pretty much similarly, depending on how they choose to file, whether again it's an S corp or if they're just filing a Schedule C to report their income and their expenses. So basically that in our world, again, it's all going to be driven by the income taxes and how they file. What's going to determine if we're going to take the lead with using their taxes for income, or if we're going to give them alternative options.
Okay. And now, speaking of, so when speaking about income tax and all that, what should an entrepreneur or someone in this world, what should they be paying themselves at a minimum in order to qualify in your world to purchase a home? For example, I say this because a lot of entrepreneurs, they forget to pay themselves, or they don't know what exactly they should be paying them, right? They need to take in money for themselves, right? They sometimes forget about themselves and focus so much on the business. How much income should they be paying themselves if they want to purchase a home? Like what threshold? It just depends on the house that they want to purchase.
That's a great question. It's really going to be determined by a lot of different factors, right? One of them being is what is the person's total debt, right? Because it's going to vary from person to person. So I can't give you a definitive number that this is what a person must file in order to qualify, because everyone is different in terms of, do they have car payments? Do they have a lot of credit cards? We have to factor all their debt into their ratios in order to understand what they are going to need in order to report as a profit for them to qualify for whatever loan amount they're looking to purchase and whatever price point. So what's going to be their budget is going to really be determined by how much money they are actually paying out in debt, in total debt, which is credit card. Liabilities are considered that. Credit card payments, automobile payments. Think of anything that's on your credit report. You have to do a total of that amount, and then say to yourself, okay, if I'm looking to buy a house of $300,000 and currently I'm paying $800 a month, let's just say as an example, $800 with car payments and credit card payments and everything included. Now, what can I afford as a mortgage payment is going to be determined really by what kind of debt they have. So again, $800 a month, let's just say, and then let's say they want to purchase a property around, let's say 225, right? You're looking anywhere between 2,400 in a mortgage payment. So you have to add 2,400, okay, and the 800 that they have in total debt, and they have to make double that a month in order to cover the whole debt to income ratio. So it's 50% of their gross income. That's the rule, no matter what, if they're self-employed or not. So essentially what they would have to report from a profit standpoint is going to be double that total, because they have to cover the $2,400 for the mortgage payment plus the $800 for car payments and credit cards. And you have to double that because we're taking 50% of their income. So this is just one example. However, what we see a lot of, Jay, is where because of reasons where, they have expenses, clients report higher expenses, especially when they're first starting off and they're self-employed. We do see that a lot. They have a lot of losses initially. However, what we understand is that sometimes expenses vary. And so what we do is we have an alternative option. Let's say someone didn't report enough for the last 2 years. We have an alternative option with something that is called non-traditional loans. And those loans, basically what they allow us to do is a deep dive into the business's deposits. How much is this business really bringing in deposits? What is actually the expenses currently now, and we can make an assessment in the last 12 months of how the business is doing and take 50% of their total deposits. We're going to take 50% of that to use for qualifying income. In some cases, we're able to do the loan with the bank statements, either 12 months, there's two programs, 12 months or 24 months, as an alternative if they're not reporting for, let's say, the last 2 years, sufficient profit and income. I think one of the biggest misconceptions, and it happens all the time when we work with self-employed individuals, is that they take their gross amount as their determination of how much money they make. And a lot of times we'll hear like, "But I made all this money. Why can I not get a house, your
Mm.
property?" And ultimately, it's because the bottom line number, which is their profit, is what we're going to use for income. So the
Mm.
alternative would be to use a bank statement loan, which is very common. We've been working with a lot of those recently as well.
Okay. Now, I think I don't know if you mentioned it, but when it comes to all this debt or stuff, people, how does student loans pay? Does student loans play a role in for an entrepreneur? Because I know in today's age, a lot of, I mean, who doesn't have a student loan, right? And so, how does the student loan play a negative role in a person's when you're looking at a person's file?
Mhm. Absolutely. So each program is going to view student loans differently, right? So there is not a cookie cutter. This is, the one guideline we're going to use. So depending on the program, that's how we're going to factor in that payment. But you're absolutely correct. When it comes to student loans, let me share some of the rules that we use to apply for the payments. A lot of times, what we see is student loans are deferred, right? And so, with these deferred payments, we'll see zero monthly payments in the person's credit report, and it'll say it's a deferred student loan. In this case, what we have to do is we have to do either one or two things, depending on the loan program. We're either going to take 0.50% of what that balance is. Okay. So if you have $100,000 in student loans, right, we're going to take 0.50 and factor that into your debt to income ratio, which would be $500, right? If you have $100,000 in student loan debt and we're taking 0.50, that's going to be $500 that I have to include into your debt to income ratio. So in the example, that we shared earlier, if you had $800 in liabilities, which I said credit card payments, I would have to add an additional 500 for that student loan.
Okay. Now,
Okay.
and
Mhm.
so going with that, what is a perfect, well, hold on, what are the two things? Who
Mhm.
is a perfect candidate in your world? Like, you're like, wow, this person has it all. Like, what does that file look like? Perfect. And then you're like, wowzers, this one's bringing all the red alerts. So, and the reason I bring this up is because I want people to visualize them as a perfect candidate and avoid themselves being the bad candidate.
Mhm. I don't want to call anybody bad, honestly,
Right.
because I think there's always a solution to everything, right? But I will say what defines a simple process, right? What defines a simple process is someone that has their paperwork in order.
Hmm.
If you have your paperwork in order, it just makes everything so much more easier for you versus trying to scramble to get all this information all at once. We'll provide you with what the solution is. Okay. If you have this, we're going to tell you this is what we're going to need. Find with clients, there is no perfect scenario. However, there are files that move a lot more smoother because of the fact that people have their paperwork in order,
Yeah.
and I cannot stress enough how you must keep all your documentation organized. And also, besides organized, I would have to say as well as maintaining record of it, because sometimes you may think I'm not going to need this. However, if you're ever planning on home ownership, there may be some certain documents that they may ask you for. But I will say, when it comes to self-employed individuals, I mean, not that there's perfection, but if they file their income and they have a high profit report and they're reporting high profits and they don't have a lot of debt, those seem to be a lot more simpler to work with in terms of being able to give them more competitive loan programs, right? Anything where people start to get creative and start filing more expenses and have less profit, we're getting tighter with income. Those, again, we have solutions for them, but then that's when you start to see things where they're going to ask you for more documentation. You're going to have to go through a lot of other types of loans in order to be able to find the one that's going to get you that home loan quicker or sooner, right? Because we can always work on your plan for the next 2 years for you to properly file your income taxes from a profit standpoint. But that's going to take some time. So it depends on how quickly a person wants to do it as well.
Okay.
Mhm.
Now I do have so I remember in home ownership, that I think you mentioned it to me too, and I've seen these memes online where they would say, "Don't purchase a car right before you're gonna, close on the house," right? So looking at an owner, what if let's say for example I'm a pizza shop owner and I have a pizza shop and I'm going to buy this new machinery for my business, but I'm also in the process of purchasing a home. If I'm the pizza owner and you're working with me, and would you say, you know what, Jay, hold off on purchasing that equipment for your business because that's new debt added on to your, because I'm going to get a loan or something to purchase it. I'm not going to pay it outright in cash. Would you tell the business owners to hold off in there if they're in the process of purchasing? Is it the same thing when it's a business owner and non-business owner? I hope that made it was a
No,
lot.
I understand the question. Yeah.
Yeah.
Well, if the person is buying it through their LLC and it's not anything that's going to go on credit, it's purchased through the business through an LLC, and
Mhm.
it's not going to impact the credit, then that potentially can be a possibility for this business owner. However, I always ask right from the beginning, please do not do any transactions that have to do with credit until they consult with us. Because we do not want to put the file for the loan in danger because they went out and purchased something which they thought was for the business, and essentially they used their actual personal credit for it. So it's something you always want to consult with us before you do that with your loan officer. And then just to bring the point that you mentioned about the car, don't purchase
Yeah.
a car. I always like to say the home before the car, right? It's an asset that is going to give you value where vehicles do not. They just cost you more expenses.
Yeah.
And then ultimately, when you get a car payment, it's a liability, like I mentioned earlier. And so we do have to include that into your debt to income ratio, taking away income and from your budget on what purchase price you're able to buy at or purchase at, right?
Okay.
Alternatively, sometimes what we do as a solution for some clients, depending on how long they've had their vehicles for, because some already have a car, we need transportation, right? I
Mhm.
mean, it's unrealistic sometimes for some people to say they're not going to have a car, they can't have a car because they're trying to buy a house. Obviously, there's differences. Do not get into a car payment that's $1,000 unless you have, significant amount of income, right? That you're able to afford that and a home. So
Mhm.
that's why it's always good to consult before you try to get into a car payment, especially if it's going to be significant, impactful to your income.
Mhm.
And also, when you think about purchasing a vehicle before and you've already had the vehicle for a couple of years, your payment is probably going to be higher than, if you just, if you can suggest that you refinance, we can reduce that payment and potentially have you qualify for more when it comes to the purchase price of a property. So say you come to me, you have a car payment, you've been paying it a couple of years. We know that payment can be reduced because you've
Mhm.
already paid into it, right? It's like a refinancement of the car loan to bring down the payment. So then you can turn around and qualify potentially for additional higher purchase price. So we would review that before you go ahead and do that.
Yeah.
It's an option.
Okay. And what if so that was a good yeah, I still remember those memes. It's too funny. Don't purchase a car, right? So don't purchase large equipment.
No, no cars, no,
Okay.
not even credit cards, Jay, not even credit
Yeah.
cards. I've had a situation in the past where someone, a few days, we had the file already cleared. And
Yeah.
a few days before the closing, they got so excited they went to go buy furniture. They totally forgot that I had told them do not do anything with credit until you're closed. That means you signed at the title company, you
Yeah.
have those keys, that property is yours. Then until then, nothing with credit. And so this individual went shopping and created, because they do a soft pull at the end, and we will be notified if you open any credit. So we received a notification, And luckily, this person still qualified with that additional payment,
Mm.
but we had to go back to the underwriting department and resubmit the file to re-clear it because it caused that, indicator that that person opened up credit. So
So I'm guessing you probably threw your papers up in the air, all upset, like, I'm there. I just told
you see
you.
the memes? You see the memes out there? There's some
Yes,
memes,
that was probably that would
the
have been
baby
me.
head on the wall, things like that. Yeah, I mean,
Yeah,
you know, again, there's a lot of hard work on both sides,
yeah,
through I always say, to close a loan, it takes a village. It's not
yeah,
me doing this by myself. I have an operation department that works behind us doing all the, dotting of the i's, crossing of the t, paperwork, the clients included, them having to get information for us. And so there's a lot of time that's placed into the process. And, at the end of the day, we all want to see everyone be happy and for us to achieve the expectation, which is to be at the closing table, the person have the keys in their hands and become that homeowner. And so the hard work sometimes could go into a high risk if the person takes action and takes out credit and does all these things before the closing. So that's why you see that very often, that we
yeah.
do not recommend you do any of that.
So going with that, and I know there's a lot of businesses out there that are cash based, right? And a lot, especially I see that in Hispanic community and non-Hispanic community as well. Let's say, for example, I'm a cash based, which I'm not. I was just doing their hypothetical. I'm a cash based business, and hey, Julisa, I want to purchase a home, and I have all this. But I'm a cash based business. Like, what do I need to get what should I do to get myself in order to start purchasing a home? What would you recommend I do if I'm a cash based business? I want to purchase a home. Should I go set up an LLC to get all this cash in order? What would you recommend I do if I want to purchase a home and I'm a cash based business?
These are the first questions that I will ask you. Number one, do you have an established business already registered in the state of Illinois? Is your business registered? Two, I am going to ask you, how are you setting up your financials? Do you have a business account? Do you have a personal bank account? What type of account have you established to obviously bring in this cash flow, since you're a cash business based, based on cash? And so those two questions, and then I will also ask you if you filed taxes on this income, right? Um, there's one thing that you're going to see a lot of too, if you haven't already, which is other memes and things online as well regarding cash into bank statements, right? When you are self-employed and if you're reporting this income, right? Because you're self-employed, you're reporting the last 2 years, your taxes, and you have invoices and you have a business flow, then what's going to happen is you're going to have documentation of that cash being deposited into your business bank account. So there's history there. So we can, in certain circumstances, I would have to validate everything, but we can use that cash because you're self-employed, you have a history of these cash deposits, and you're filing your taxes with these cash deposits. Okay. Now, if you're someone that's a W-2 employee, and you're just a regular being paid regularly on a 1040 filing of your taxes, and you have all this cash that you just mentioned, Jay, let's say you started a side gig and you're getting paid in cash, you're not filing taxes, you're not, you didn't register a business, but you're cash flowing, you're bringing in some cash. If you deposit that money into your bank account and you want to use it for your down payment or your closing costs, you are unable to use that cash that you have if you go and you deposit that money, because you again are not self-employed. You don't have history of cash payments into your bank account because you're self-employed. It's just a side gig that you have going on. Then in that case, we are unable to use that cash.
Mhm.
They do require seasoning of cash payments. We are going to look into the last 2 months of your bank statements for deposits. So anything outside of that, they're not going to question. But if we're within the last 2 months, it will be questioned, and we will not be able to use it at the closing in that scenario.
Okay, well, that's definitely good to know for folks. 'Cause I
Mm-hmm.
know people who doing those side gigs and stuff. I think you're right. They need to get their financials ordered because they will look at people will look at everything, and I know everything that comes in. I think that's very important for them to know. Um, And going with that, and I know for someone who has a job like the 9 to 5 job, and
Mhm,
correct me if I'm wrong, right? You usually look at 2 years of employment, correct? Like, what's your last 2 years of employment, right?
mhm.
So, for someone who has a business, how far do you look back at their business? Do you look same way, 2 years, or like how do you look at the person who's a business owner?
That's a wonderful question. So the requirement is 2 years. Okay. The requirement is 2 years. Now, there are circumstances where we're able to use 1 year of income taxes for a business. Okay. However, they must be in business for at least 5 years in order for it to run through the system. So there is exceptions to that rule, but we do require 2 years of the taxes. Now, there are non-traditional loans that I mentioned, right? I can use bank deposits for the last 12 months, right? So if the person hasn't had the business for the last 2 years, I can actually use 1 year, but that's a non-traditional loan of bank
Okay.
statements. hmm
Okay. Now that's good to know. And just these last couple minutes here as we start wrapping up here.
hmm
Um, what so let's just recap about how what we talked about today. So I want to purchase a home. What would you say, Julisa? I'm ready to purchase a home. I want to purchase this home. It's been time. I've been living in this apartment forever. What should I start getting my documentation? What documentation should I have ready for you, ready to go?
Love that question. Love,
Yeah.
love, love that question. Okay, so any regular, W-2 employee 1040 filing of income taxes, we are going to require the last 2 years of your income taxes and the W-2s. In some cases, depending on the loan program, we'll only use the W-2 without using your full package, but I always recommend you have those available. I always like to review them and determine what route we're going to go in terms of loan programs. Some down payment assistance programs are going to require the last 3 years of your income taxes. So if we go the route of searching and finding down payment assistance programs, there is one that requires the last 3 years. So that would be the exception to the 2 years. The next thing we're going to require is your pay stubs. We are going to match up and make sure your income actually makes sense based on what we receive as a verification of employment. So we're going to ask you for a full month or more pay stubs. So if you get paid weekly, we're going to ask you for your last four. And then if you get paid biweekly, the last two, or semi-monthly, the last two. Now, through this whole process, we will continue to ask you for updated documents on that as we continue to move forward with that process. So I always say, if you don't have access to a portal and they're giving you your pay stubs directly, always make sure you keep your pay stubs, your paper pay stubs. Most companies now all have it online, but you'll be surprised there's some that still, go the old way, and they don't have access to online, and or the person doesn't have access to online. So always keep your paper pay stubs. The third piece is going to be, we have to review your assets. What are you going to bring to the closing? And the way we're going to do that is through your bank statement. So we're going to ask for the last 2 months of your bank statements. Here, what the underwriters will do is they'll go through a deep dive of all your deposits. If you have your direct deposit into your bank account, like your payroll, that's not going to be questioned because that's common sense, right? It's your payroll being deposited. Anything outside of that, there's a percentage that's allotted that they're going to question in terms of where those deposits came from, and they have to have paper trail in order to be able to account for that money. And that we will determine based on whatever that could be potentially. Let's say tax season is right now going on, so
Mhm.
we see a lot of tax deposits, and they just have to match your income taxes for them not to question those deposits. So things like that is what we're going to review. In some cases, if you have consistent withdrawals in the last 2 months that are similarly, let's say they notice that there's a loan coming out of your bank account the last 2 months, they're going to question that. They're going to want to know what is this liability that's not on your credit report? Something
Mhm.
to keep in mind, okay? And then thirdly, of course, your identification. We're going to need your driver's license, state ID. If a person is a resident, they're going to ask for their green card. If they're a DACA recipient, they're going to want the permit that they give in order for them to be a DACA recipient, and when it's going to expire. We also work with ITIN loans as well. So we do also have ITIN that we're able to help self-employed, and there are a lot of other options alternatively to that is non-traditional loans for self-employed individuals that have ITIN.
Yeah. Okay. Well, I am actually going to put your information here for those of you who want to contact you as we wrap up here. There's your phone number, so people who want to get in contact with you. Now, do you only work in the state of Illinois, or what other states can you work with individuals?
We are licensed in 50 states, so I'll be happy to help anyone outside of the state of Illinois. Also, I may mention that we do have down payment assistance programs in other states that I'm able to work with. So if anyone is interested in obviously moving out of state, they can reach me. I can let them know if we have funds available. It's a $10,000 down payment assistance program. And so it is available in other states as well. I don't have the list in front of me, but anyone that is interested can reach me and I can validate that for them.
Yes, and I definitely recommend Julisa if you want to purchase a home. And any last final words for folks for business owners or entrepreneurs who want to purchase a home?
Thank you, Jay, by the way, for the invite. I do appreciate you inviting me on to this live and sharing, wonderful information to entrepreneurs, self-employed, who I find fascinating. They take the leap of faith, they take on the risk, they work hard, and I believe that's why I have a big heart for them. And so I'm here to help with any questions that they may have. I am here to guide them through the process so that they're able to that dream home that they're looking into or investment property. We also do have small business loans as well and commercial real estate. So in the event that they're looking to buy even for their business a location, we'd be happy to also assess them and give them guidance with that as well. And I want to wish them a happy 2023 and successful 2023 as well.
Yeah, well, thank you, Julisa, and thank you everybody for watching this. Make sure you subscribe to this YouTube channel and make sure you reach out to Julisa. Her phone number and contact information is up on the screen. Thank you again, Julisa,
Thank
for
you,
joining us
Jay.
on this
Thank
National
you.
Entrepreneurship Week. All
Thank you,
right.
everyone. Bye-bye.
Bye-bye.